What's going on, growth chasers? It's the Dividend Bloodhound here, back with another investing episode. Today's episode we're conducting a tattooed chef stock update, and specifically the fact that analysts are coming to this stock. If that sounds like something you're interested in, then do please smash that like button, subscribe to my channel, and I will see you on the flip side of the intro. See you there. Hey again guys, welcome into the video. So as I mentioned, we're conducting a tattooed chef stock update today. I thought I would conduct this review just before the analysts potentially get involved in the month of December, and I've heard some grumblings down the investing channels that I'm in contact with about the share price not growing very much at the moment. It is pretty much stuck solidly between $15 and $20. $20 seems a long way off at the moment. And all I would say about that right now is that people are expecting way too much of this stock and this company way too quickly. Those of us with a long-term sight are expecting big things in 2021, but I keep seeing grumblings of people complaining that the stock price isn't moving as quick as they thought. Business building is a block by block process. Overhead growth and ridiculous share price growth doesn't happen often. It happens after being patient, or you might get lucky and time the market right maybe, or sometimes it happens in SPAC investing. But now we're out of the other side, we have to look and wait for the fundamentals and analysts to get involved and actually put price targets on this company, and that is something that we have to be patient for. Now if that's not something that you're interested in, then maybe you should consider selling up and getting out, and then using your money elsewhere and then returning later on down the line when the stock price does start to kick up a bit. You might lose a bit of return in that case, but it stops you holding the bag essentially in the meantime and then complaining about it. My opinion hasn't changed on this company at all. I'm still extremely bullish on this company over the long term, especially for 2021 and 2022. I'll move on to the reasons why that is continued just later down the line, but for now all I wanted to say is this share price at the moment, $15 a share, is an absolute bargain, and I would, if I could, continue to buy more, especially at this price. However, it is very heavy in my portfolio at the moment. It is my biggest position, making up 12% of my entire portfolio, and I think that makes it just a little bit too heavy for me. I prefer to keep my stocks at 10% or less for diversification reasons, of course. I recently watched the Jefferies West Coast conference, and it featured Sam Galletti, obviously the CEO and one of the head people at Tattooed Chef, and I was very impressed with this guy's answers to all the questions, his vision and his focus for Tattooed Chef over the long term, and also his experience. This guy knows exactly what he's doing. He's prioritising the right things. He's ringing all the right bells for me and raising green flags all over the place. He's not in a rush. He's not pandering to investors that want the price to triple overnight or anything like that. He's doing his own thing, maintaining a profit, and that is exactly what I like to see as well. If you haven't seen the Jefferies conference, then I highly suggest you watch it. I will post a link in the description below. It is very informative about Tattooed Chef and its future direction. We have some high quality products coming down the line, expanded distribution all over the place, and a marketing campaign inbound, all in very safe hands with some exceptional management. Again, going back to Sam Galletti, he takes profit very seriously and has always said that that will be a priority and a target for his business and Tattooed Chef as well, which is very important. A lot of companies get hepped up in the growth side of things and they get into an awful lot of debt just trying to expand as quick as they can. Tattooed Chef's going to take a potentially slower approach because they might not grow as quickly as you might think, but it's going to be sustainable long-term growth, and they're going to be generating a profit all of the time. He also said that Tattooed Chef plans a marketing campaign in 2021 and will be committing resources to this, more on that later, and calls that that plant-based food is only just getting started. The playing field has only just begun, and they've only just started laying the foundations in the sector of what they could go on to achieve. And his daughter, Sarah Galetti, is really leading the charge on that with some very, very innovative products. The company, as we all know, has recently de-SPACed, and it is currently sitting on $95 million in cash, ready to use as it sees fit, with revenue adding to that as well. And it has very low debt levels. In fact, I don't think it is in very high debt at all, which for a comparable company going the route that it has saved it so much in terms of building its brand. Many companies would have spent a lot more trying to build the brand that Tattooed Chef has, and Tattooed Chef hasn't spent anything so far on doing that, and it will never get in debt to do so. The $95 million will be spent wisely. They're in no rush to spend it, according to Sam, and it will be spent on wise investments like expanding distribution, expanding productivity so they can produce more products, and then also gearing some of it towards a partnership with a PR and marketing firms, and this will likely be confirmed and budget set for this in early 2021. The projected revenue for Q4 2020 and the year's revenue, 220 million. One important note to make here is that that does not include the marketing blitz that's going to happen next year. So that 220 million that is projected as revenue may, and probably will be, considering the effects of marketing, be a lot higher than that as word continues to spread and people actually start to find out who Tattooed Chef is. And now on to the main event, Analysts. It is very important for us investors to have analysts rate and get involved with this company and start running coverage. Now, we've already had one from Roth Capital that now everybody knows about that set up a price target of $26, and hopefully over the medium term that is going to be achievable relatively quickly. Other analysts are expected to pick up coverage either in December, which is why I'm getting this video out now, and then I can react to analysts as they pick up their coverage. It's extraordinarily difficult to predict because analysts aren't obliged to tell Tattooed Chef when they're going to pick up coverage. They could potentially say, oh, maybe it's coming next quarter, which I'm led to believe by what I've read that is happening, but there's been no confirmation of any more analysts joining the fray yet. But it has been murmured and rumoured that there will be at least a couple before the end of this year, which obviously, us now being nearly in December, or in December by the time this video airs, we're expecting that in the next 30 days or so, or early 2021 in January. Which leads me on to why I'm happy to keep adding more shares in line with my portfolio diversity over the coming weeks or so if I can, because this price won't stick around forever. As soon as more analysts come on board and it starts to get ratings, as long as those ratings are positive, and it is very hard to see that how they could possibly be negative. I think $26 a share is fair right now until we get to the last quarter of Q4 of 2020 and Q1 2021. That was a bit of a mouthful. I think $26 a share is fair-ish around then, but I think we could really start to see some traction towards the second and third quarters of next year. With that all being said, that should hopefully get a lot of investors' appetites wet and start getting even more people involved in this stock and spiking the share price further. I fully expect to triple my money on this company in the long term. As a bare minimum, I fully expect a 300% return minimum, and going onwards from that even higher over to 2022 and beyond. As always guys, it's been an absolute pleasure to bring you this video. If you could see your way to smashing that like button and subscribing to my channel, that would be absolutely fantastic, and hopefully I'll see you in my next investing episode. Catch you there.